Hello guys, today's video is gonna be about Pinduoduo and why Pinduoduo is overperforming the market in the last 6 months and overperforming the other Chinese e-commerce companies like Alibaba and JD. So, if you are curious, if you don't know why Pinduoduo is such a great company and is overperforming Alibaba or JD, you have to watch this video. So, continue. First, I was buying Pinduoduo and doing videos about this great company in May when the stock was around $60. It was the point I started understanding the company and starting buying. And I was doing video trying to explaining why I like this company. And now the stock is over $100. So it's been a really good few months. So Pinduoduo in the last 6 months is up 56%, while Alibaba is down 11% and JD down almost 27%. Why is that happening? I've done previous videos talking about Pinduoduo and why I think they have a really wide moat, and this is a really great company. But in this video, I want to explain you why Pinduoduo is overperforming. So first, you have to understand what Pinduoduo is. Pinduoduo is an e-commerce platform that focus on bring the best prices to the consumer. So it's like a Costco in China, but Pinduoduo doesn't make money selling the goods. They make money with advertising on that. So they focus on bringing the product from the producer to the customer. Bring With Pinduoduo you can have the best prices because you are not you are buying directly from the consumer, so from the producer I mean. So that's the big advantage of this company Pinduoduo. um, they can make money advertising on their platform, and they can with that model of business, with that business model, they can have the best price. And this is a really wide moat that is only growing as Pinduoduo expands. So first, why Pinduoduo has a really wide moat? They focus on the low tier market. So Pinduoduo has been successful targeting the consumers in the rural areas or smaller cities on China where Alibaba or JD can't come. So China is a really big country, and there are space for a lot of big companies like Pinduoduo, JD, Alibaba. So Alibaba and JD are more mature companies. Pinduoduo, with this really good business model and bringing the lower price, they are growing a lot, and now they are growing overseas as well. So the second reason is they have a strong social commerce platform. They have a lot of active users on their platform. So with a lot of people buying from their platforms, they have a lot of power. They can advertising on that. They have a lot of people there, so they make money because of that. So as I've talked before, the third reason is because Pinduoduo has the lower prices. uh, I don't know where you are from, guys, but I'm from Portugal. So in Portugal, Timo has the best price. Can buy things really cheap. They are it looks like they are offering things to the consumer. So in China, they have a lot of popularity with Pinduoduo, but now they are selling goods overseas with their platform called Timo. It's the fastest growing app in the United States and in Europe as well. Uh, I lost count of the the things I bought from Timo this year, so I'm really liking it. There are no other companies that can compete with their lower prices. I do believe they are even lower than AliExpress from Alibaba or other platforms from China. Uh, First reason is because they have innovative market campaigns. They are investing a lot and with a lot of success during this last year. You can see that from Timo has been a really success overseas from China, in the US, in Europe as well. They are growing a lot, so their marketing campaigns has been really effective. and they have been a really strong execution. When you look into Pinduoduo, what they have done, what they are executing, growing their marketing expenses, doing a lot of marketing, increasing their um, their products, bringing more product to the consumer, and they are a lot growing a lot, and they are not losing focus on profitability. They have really good margins. They are making money already. They have a really good balance sheet. So that's the five reasons Pinduoduo are overperformed. The Chinese economy, it's been 2023 is a really difficult year for China. The economy is not rebounding as expected. That's why Alibaba, JD is having difficulties. Their stock market, their stocks are down year to date, or they are in the same. They are Alibaba. I do believe Alibaba is up just a little bit year to date. JD is down a lot, but Pinduoduo is been growing a lot, and they are beating expectation. That's why Pinduoduo is overperforming the rest of the market. So when I look into Pinduoduo, Pinduoduo is the first company I have in my research platform hitting 100 score in my quality score I developed. So what that means? That is basically when you look into their fundamentals list last year, they have been perfect. If you look into the last 5 years, their revenue growth are compounding at almost 200% per year. If you look into the revenues, they are growing a lot. They have a really high margins. Bear in mind, even though Pinduoduo is a platform that sells goods, it's an e-commerce platform, they don't make money selling the goods. So they are like a Facebook or a Google. They make money from the advertising. So they have really high margins. Their gross margins last year is 72%, and the net margins it's around 25%, which is really high. They have almost no debt. They have 24 billion in cash and 200 millions in long-term debt, so they can pay all their debt with the cash in hand, and there are still plenty of that. When you look into returns on invested capital or on equities, it's almost 20%, 29% for the return on invested capital and 35% on the return on equity. For me, it's one of the biggest moats out there, a really wide moat like Costco. They are taking advantage, and as long as Pinduoduo continues to grow, their moat will grow with their growth, because it's like an economy of scale. I don't know if you have heard about that, but it's like Amazon, Costco. When they grow, they can have the best price to the consumer. So it's really difficult to compete with Pinduoduo, and Alibaba and JD are having a lot of difficulties to compete with Pinduoduo. They have in free cash flow positive, and they are returning. Uh, they can return now cash to the consumers via buybacks. Maybe they are still trading at a forward P of 17. It's for a company with this quality, it's a really low PE, a low valuation. So I've talked to you in previous video about valuation about this company. I'm not talking anymore. So for me, my intrinsic value is around $90. I do believe buying below that price, it's a really good opportunity. Now it's trading above that, but I already have a full position, a big one. Pinduoduo is a big part of my portfolio now because of the stock is going up a lot this year, so now it's a really big position. I would like to buy more if the stock comes down, but for now it's a no for me because I was really lucky into finding this company before it hit this price. So I was buying a lot when the stock was at $60 this May. So, and I continued to buy as the stock was going up, but I think I got the stock at a really good price, and it's a company I want to hold for a very long time. So I'm really bullish. So That's my opinion. I hope you find this video useful and I hope you liked it. So if you like it, please subscribe, guys. Bye.